What if I told you that one man made $1 billion in a single day? No startup, no inheritance, no lucky lottery ticket, just one bold financial bet. And that bet was so powerful, it forced an entire country to change its economic policy. The man behind it was legendary investor George Soros, and the day it happened is remembered in financial history as Black Wednesday. But the real question is, how did one investor defeat a government and walk away with $1 billion in just a few hours? Let's go back to the beginning, Europe's big financial experiment. In the early 1990s, European countries were trying to create a more stable economic system. To do that, they introduced something called the exchange rate mechanism, or ERM. The idea seemed simple. Countries would keep their currencies stable by linking them together. For example, the British pound sterling could only move within a small price range compared to other European currencies. If the pound moved too high or too low, the government would step in and fix the problem. On paper, the system looked brilliant, but in reality, it had a serious flaw. Currencies don't follow political promises, they follow economic reality, and Britain's economy was starting to struggle. The growing problem. At that time, the United Kingdom was dealing with several economic problems. Inflation was rising, unemployment was increasing, economic growth was slowing down. These conditions normally cause a country's currency to lose value, but the British government was still trying to keep the pound artificially strong so it could stay inside the ERM system. Many economists believed the pound was overpriced. In simple terms, the currency was worth more than the economy could support, and when a currency becomes overvalued, it creates a huge opportunity for traders. One investor noticed this opportunity before almost anyone else. George Soros saw the weakness. Soros was famous for studying global financial systems. He didn't just look at stock charts, he analyzed entire economies. Through his hedge fund, Quantum Fund, Soros and his team studied the British economy very carefully. Their conclusion was bold. They believed the British government would not be able to defend the pound forever. Eventually, the government would have no choice but to let the currency fall. And if that happened, anyone betting against the pound could make a fortune. So Soros decided to make one of the most aggressive trades in financial history, the $10 billion bet. Instead of buying the British pound, Soros did the exact opposite. He bet against it. This strategy is called short selling. Here's how it works. First, Soros borrowed billions of pounds from banks. Then he immediately sold those pounds in the currency market. Now he held other currencies instead. If the pound later dropped in value, he could buy it back at a cheaper price, return the borrowed money, and keep the profit. But this wasn't a small bet. Soros reportedly built a position worth more than $10 billion. $10 billion. This meant Soros was directly challenging the British government, and soon the financial battle began. The government fights back. As traders around the world started selling the pound, its value began to fall. The Bank of England quickly stepped in to protect the currency. They started buying massive amounts of pounds in the market to push the price back up. But that wasn't enough, so the government made an even more dramatic move. They raised interest rates. Higher interest rates usually attract investors, which can strengthen a currency, but the market wasn't convinced. Traders kept selling, pressure kept building, and defending the pound became more and more expensive. It was like trying to stop a massive wave with a small barrier. Then came September 16, 1992, the day that would later be called Black Wednesday. By this point, the British government had already spent billions of pounds trying to defend its currency, but the pressure from the global market was simply too strong. Investors around the world were betting that the pound would fall. Finally, the British government made a shocking announcement. The UK would leave the exchange rate mechanism. Within minutes, the value of the pound dropped sharply, and that was the exact moment Soros had been waiting for. The billion-dollar moment. As the pound crashed, Soros began buying back the pounds he had previously sold, but now they were much cheaper. This allowed him to close his trade and lock in an enormous profit. By the end of the day, Soros had made around $1 billion in just one single day. The trade instantly became legendary, and Soros earned a nickname that the financial world still remembers today: the man who broke the Bank of England. The unexpected twist. Interestingly, the story has an unexpected ending. Although the crisis embarrassed the British government, leaving the ERM actually helped the UK economy in the long run. Once the pound was free to move naturally, it became cheaper. This made British exports more competitive around the world. Over time, the economy began to recover, but the event remains one of the most dramatic moments in financial history. Final lesson. The story of Soros isn't just about money, it's about understanding how financial systems really work. Soros didn't rely on luck. He relied on deep economic analysis, patience, and the courage to act when he believed the system was flawed. And sometimes in finance, the biggest opportunities appear when everyone else believes the system cannot fail. But in 1992, one trader proved something remarkable. Even governments can lose to the market, and sometimes one decision can change financial history forever.